Hello guys and welcome to today's Daily Dose. Today's the 7th of October 2016 and whoa, what a day we've had today in the markets. The first opportunity we're going to look at today is the British pound versus the US dollar, the cable, and as you can see from this very large candle that we have here, that it looks as though there's been quite a bit of activity here. Now overnight we had kind of a mini flash crash really in the cable. Fat finger orders supposedly happened on an institutional level, so someone's put an extra 0, 2 or 3 on their order to sell in the cable market, and it's caused this absolutely massive large decline. Now the market kind of moved 600 pips to the downside and then about 400 back up in the space of 2 minutes. So you can imagine that that's quite an aggressive move, and a lot of money's been made or lost in that. I can imagine a few blown accounts have suffered the woes as well. Liquidity based in the markets on overnight for the Australia, New Zealand market, some of the Asian markets as well, means that it can be quite thin. And as you can see here, as soon as this started happening, the large order went through, all the algos went on the back of it, and it just went even thinner with there being barely any bids in the market there. I'm pretty sure had it been the middle of the trading day, this kind of scenario wouldn't have been so exaggerated, but nonetheless it did happen. As we've expected, the cable is just kind of, the pound is just getting weaker and weaker and weaker amid a hard Brexit kind of viewpoint going forward. You can kind of see that even with this large move, today was non-farm, and this candle with the arrow here indicates non-farm payrolls on the 4-hour chart, and if we go down to the 1 hour, it kind of a bit more emphasized there. So already in this downward bearish trend, this overnight we can see that there's been very minimal trading in terms of just small ranges on these candles. The market's kind of ticking over, probably waiting for today in terms of the jobs report. Some big players not getting involved, wanting to kind of size up what's actually going to go on. And this candle here is non-farm payroll. We had 156,000 jobs versus the 175 expected. So as you might expect, the dollar getting a bit weaker there, so the cable rising as a result, because of it missing these new job numbers. So we've had this little bit of an increase here, but nothing much, based on the view that we've got this such large selling pressure just once in this candle, and even ignoring this, we're still in quite a distinct bearish downtrend. So that's basically the what we're looking at here. Not really much else to say about it, really, in terms of it being since non-farm, it's been quite a quiet day really in terms of forex. Fridays can be quite quiet anyways, kind of quite dwindling down after 2 o'clock, 2:30, even at 3 o'clock at the latest, even with the US Open. But of course the currencies in terms of news is quiet on that front, so not much really to say there. So kind of just looking to see what the market brings about in the next week. Another thing we want to look at is gold. So basically what we have here, go on a higher time frame, let's get rid of this, there we go. So you can kind of see here that we've had this quite aggressive move to the downside, technical formation kind of failure there. The market just collapsed over the last few days, and the important thing to note is that this sort of area of support, and that when you're trading with Fibonacci, it can be a very useful tool if you use it correctly. So you've got to make sure that you draw the stencil out correctly initially, otherwise the numbers aren't going to line up. So basically, if we kind of have a look here, we've got this support region that we've got here, so we can kind of draw it around there. We've then got another one, whoops, around there. So you can see that this kind of range here, albeit doesn't look very much difference really, it's a couple of pips, about 70 odd, sorry, yeah, quite it's not a huge number of pips per se in terms of this market, but what it does mean is that when you're drawing your Fibonacci ratios, drawing the level at the upper black line versus the lower black line will actually completely alter these ratios that you're looking at here. So it's important to kind of be aware of them. And there's only a few pips here, so to speak, in this range, but it does make a bit of a difference. So you can see here that the market's pushed all the way down to the 1618 Fibonacci extension. Now I draw it from the low of this long candle, kind of seeing then whereby when you have a long distinct candle, the market still continues to move downward. You'd expect the momentum as it's pushing downward to kind of be, it's kind of the momentum is decelerating, so to speak. It's not having the aggression that it did on the initial impulse move. So what I've done is I draw it based on this low here, so it's kind of in between these two lines, so it can kind of give a bit of an idea. So it doesn't line up perfectly, but it's a good indication that we've got this 1618 Fibonacci extension where we've had a bounce, and on the daily time frame now we're kind of making a doji candle. So going forward on Monday, what I'd be looking to do is to potentially go long here now. So depending on how the other markets are performing and how this gold opens on Monday. But remember now, if we have a doji candle, I do not want to just open up and click a buy order straight away. We want to see if the market can really push down, perhaps. And we've got a similar sort of, not so much of a doji, but the kind of an indecision candle, so to speak, here, with a long wicks with a body that shows the market really hasn't really differed in terms of where it actually starts and ends. But because of the length of the wicks here, got quite a distinct doji based on the turn that's quite long-legged. So I'd be looking for the market to try and push down again to try and target these lows, and I might take a long on there based upon the view that we've already had a recent price rejection. Of course, that's not going to be perfect. You could have been doing that here, but the move, you've had this long impulse move, it'd be a bit too quick there. You might have had, you've had the market pushing up already and then pushing straight back down, so you've got a little bit of a dead cat bounce there. So, but by here though, we've had price rejection with a little bit more selling and a long-legged doji if it closes as we are, which I suspect it will, based on it being 7:05 UK time in the evening, and we look for the market to try and push down, so you've got that price rejection to actually kind of go long, and hopefully there you get maybe another doji or even a positive candle there. So we could look then to try and see, because this is a bit of a breakout pattern, so we see if the market will actually come back and maybe test up these higher levels here. I'm not 100% sure whether we would actually see it going up to the 1300 handle, but let's kind of go up the time frame here. It does look plausible that we could have a bit more of a second chance going higher, so to speak. So those are the two opportunities we're looking at for this week, over the weekend. Now kind of see what happens on Monday morning. Not much else to really say on this daily dose. Quite quiet now, based upon the flash crash that we've had, kind of taking precedent over all other news. One thing to note about that flash, if I actually do go back to that chart, was the fact that despite this being kind of a fat finger on a massive level, and the low liquidity just because of the time of day, it does point that the market, even though that did happen overnight, the market did not push to those previous highs, which signifies that there is some kind of bias still to the downside, as you might expect. Now, if that was a flash crash whereby the market comes right down, you go right back up, and you've got, say, a dragonfly doji, then you might suspect that to be the kind of, all right, okay, that's an error that's happened, finished, and normal trading will resume. The fact that this happened and the market has failed to go back up to these previous levels, I'm not disputing the fact that today at some stage you would have had a break below the 126, causing some selling pressure anyway, but that was kind of a catalyst where the market then here has kind of ebbed and flowed, and we do expect it to continue going lower, with on the Monday morning it'll kind of come back up here into this 126 handle again, or based upon the non-farm payroll news kind of carrying on up there, or alternative we might just get it rolling over and try to target first these lows at the 122.27 and then the 119 handle as a longer term target. We don't really know. But that's basically it for this evening, guys, and make sure you have a good weekend, and kind of do relax and have a bit of do a bit of your analysis ahead of Sunday evening as well. And thank you very much for your time, guys. Make sure you do like and subscribe to these videos, it does help. And signing off, Christian. Have a good weekend, guys. Goodbye.